We are living through the largest financial experiment in human history, and yet most people walk through it blind. Global debt has ballooned to levels no civilization has ever handled before. Governments borrowing trillions without hesitation. Central banks creating money at the press of a key. Families taking on mortgages that stretch for decades like buying a loaf of bread. And still, we speak of debt as though it's natural, harmless, and permanent. The reality is far more unsettling. Debt has always been a tool of control, a lever of power, and a latent danger waiting for the spark that sets it off. The real question isn't whether this towering mountain of global debt will cause a crisis, but when it will happen, and who will bear the consequences when the system finally resets. To truly understand our predicament, we must trace debt back to its very origins. Debt is as old as human society itself. The earliest clay tablets unearthed in Mesopotamia weren't stories or poems. They were financial records. They documented who owed whom, how much grain, how many cattle. In those early days, debt was not merely economic. It was deeply tied to morality and order. Kings and priests oversaw it, and occasionally wiped it clean in grand jubilees, erasing obligations to prevent societal collapse. Pause for a moment and consider that. Ancient civilizations recognized that societies could not survive if people were perpetually enslaved to obligations. Too much debt was understood as dangerous even then. Fast forward to Renaissance Europe, and debt had transformed alongside society itself. In Florence, banking families like the Medici managed enormous sums, lending to kings and popes to finance wars, build cathedrals, and construct empires. But debt always carried risk. Spain, flush with New World silver, declared bankruptcy 4 times in the 16th century. A stark reminder that even empires rich in treasure could drown if ambition outstripped reality. By now, debt had evolved. Beyond personal or local concerns, it became geopolitical, shaping the course of wars, the fate of dynasties, and the borders of nations. The modern explosion of debt began in the 20th century. After World War I, nations found themselves buried under obligations so heavy they seemed impossible to repay. Germany, forced to shoulder reparations under the Treaty of Versailles, spiraled toward hyperinflation in the early 1920s. Wheelbarrows full of paper marks were needed to buy bread. This economic collapse left scars deep enough to influence the rise of political movements that led to World War II. Debt, it became clear, was never just numbers. It was the fuel of chaos. Then came 1944 and the Bretton Woods Conference, which laid the foundations of the modern financial world. The United States, holding most of the world's gold, established the dollar as the anchor currency, tying it to gold at $35 an ounce. Other nations pegged their currencies to it. The aim was stability, but the result was dependence. For a time, the system worked, but the lure of borrowing was irresistible. By the 1960s, with the costs of the Vietnam War and domestic programs mounting, the U.S. printed more dollars than it could back with gold. Foreign governments began demanding payment in gold, and in 1971, President Nixon severed the final link. Debt became untethered. Governments could now borrow without real limits, constrained only by the fragile trust of the world. This moment quietly reshaped the rules of finance. Debt shifted from something finite to something seemingly infinite. Central banks learned to control economies with interest rates, slow growth, lower rates, borrow more. Crisis? Print more money to patch the problem. Each rescue created the need for even greater leverage the next time. The 1980s saw enormous public debt growth under leaders like Reagan and Thatcher. Developing nations borrowed heavily from Western banks, only to collapse under the weight, triggering the Latin American debt crisis. A pattern emerged: chase growth with debt and drown when reality returns. The 2008 financial collapse was the apex of this pattern. Mortgages were bundled into securities, insured with derivatives, and leveraged at dizzying ratios. When the structure collapsed, banks fell, pensions vanished, and governments poured trillions into bailouts. The bitter irony? Those who borrowed recklessly were rescued, while ordinary citizens bore unemployment, foreclosures, and austerity measures. Debt revealed itself as a system rigged for the powerful. Since then, the numbers have reached the surreal. Global debt tripled in just 20 years, surpassing $300 trillion by 2023, nearly 4 times the global economy. Japan's public debt exceeds 200% of GDP. The US adds trillions yearly, and emerging markets borrow in foreign currencies, exposing themselves to sudden collapse. Everywhere you look, debt has grown like a shadow over our lives. Debt warps behavior. It fuels speculation. It transfers wealth, and most critically, it binds future generations. Every dollar borrowed today is a claim on tomorrow's labor. History shows only 3 ways for debt to end: repayment, inflation, or default. Empires, nations, and systems never escape this reality. The present crisis is often invisible. Governments don't knock on your door to collect. They sell bonds quietly. Credit cards make borrowing feel effortless. Corporate profits are often amplified by borrowed money. Leverage seems weightless when rising, but catastrophic when it falls. The US, now the central anchor of global finance, carried over $34 trillion in debt by 2024. Translate that abstract number into reality: hundreds of thousands of dollars per taxpayer, with interest alone rivaling defense budgets. Across Europe, China, and beyond, debt has metastasized, sometimes hidden, sometimes blatantly visible. The temptation of debt is psychological as much as financial. Politicians borrow to avoid difficult choices. Citizens are reassured that debt is someone else's problem. But rising interest rates, like we've seen since 2022, make the hidden costs suddenly tangible. Higher mortgage payments, skyrocketing corporate refinancing costs, tighter government budgets. Debt is a predator, sleeping quietly until it awakens. Even now, debt is sold as a path to prosperity. Students are encouraged to take loans for uncertain futures. Families stretch for homes they may struggle to afford. Nations are told deficits are irrelevant because currency can be printed. It's a comforting lie. History tells the truth. Debt is never free, infinite, or safe. So what happens next? Inflation quietly erodes the value of obligations. Governments may restructure, some may default entirely. None of these options is painless. But signs suggest inflation is likely, quietly shifting the cost to ordinary people. Your savings, wages, and purchasing power will bear the burden. The oldest trick in finance repeats itself. Debt seems someone else's problem until it isn't. Debt is about power. Who gets rescued, who gets punished. Banks and corporations survive, politicians retire. Ordinary people lose homes, jobs, and hope. Understanding debt isn't just financial literacy, it's survival. Ignorance chains you to a system you don't see. Awareness gives you a chance to protect yourself. Build wealth that isn't hostage to paper promises. Seek knowledge that clears illusions. Gain perspective that keeps you from repeating history's mistakes. History is unyielding. Debt grows, leaders deny, crises erupt, societies reset. You cannot stop the cycle, but you can choose whether to face it blind or awake. Global debt is more than a number. It's the shadow over our future. Learn its lessons, and you may avoid the traps that have swallowed every empire before. If this perspective opened your eyes even slightly, hit subscribe. History holds the answers, and I'll show you where to find them.